Absolutely be a back and forth between like bots and bot detection probably forever. I definitely see it as sort of an arms race. There's a lot of programmatic trading that's driving numbers on meme coins.
GM, and welcome back to Solana Floor. Solana's Launchpad wars have reached a fever pitch, with over 40 platforms now competing for market share in one of the network's most lucrative sectors. Wavebreak, a new launchpad created by the Solana DeFi OGs Orca, is one of the newest players to this fierce battleground, combining anti-bot mechanisms and daily rewards to give human traders a fair shot in the markets. Today, I'm joined by Orca CEO Nathan Davis to dive into how exactly Wavebreak levels the playing field, and to see where Solana's DEXs could be going next. Nathan, GM, and welcome to Solana Floor.
GM, yeah, thanks, Finn. Thanks for having me. Appreciate it.
Excellent. Well, thank you so much for coming on. I'm going to dive straight into it. What do you think are the biggest issues facing Solana's launchpads today, and how does Wavebreak solve those problems?
Sure, yeah, great question. I mean, I think the Solana Launchpad ecosystem has definitely grown a lot over the past year and a half or so. And so you've seen a ton of really tremendous success and innovation from a lot of different platforms on the network. And I think one of the issues we've kind of seen be persistent, though, among all of that, is that issue of kind of programmatic interaction with launchpads or botting, right, you might call it. And so it takes a few different forms, like it could be sniping, could be sandwiching, could be like bundling launches where the token launch and first buys are like bundled into the same transaction. Some of these things that are market structure issues that put human traders at a disadvantage to people who are more advanced and can operate a more sophisticated automated technology. Right. And so we saw there was an opportunity there to try and build something to address that in a way that others hadn't before. And so we've seen a lot of efforts and to be clear, I think a lot of this is not necessarily driven by the other launchpads themselves. It's by people who are using it in a way that is disadvantaged to other users. So I don't want to also sound like this is an intentionally malicious thing from other people that we might be competing with. I think it's just kind of a fact of how it's like permissionless systems often operate in the wild. And so our goal was to try and build something that solved this problem in a new way. And so that was kind of our goal, is to give human traders a chance to be more competitive for competitive launches again.
Okay, excellent. And so you mentioned that the anti-bot mechanic is kind of the key differentiating factor of Wavebreak. Now, I did a lot of NFTs back in 2021, 2022, and the word anti-bot has kind of given me PTSD because I'm just reminded of all these candy machine sites and you're clicking mint and nothing's working and you're just watching the supply evaporate before you. So how is Wavebreak's model superior to the kind of, not the lies we've been told before, but the anti-bot mechanisms we've been given in the past?
Sure. No, that's a great question. I think basically the way we saw it was like botting is not just like a crypto specific problem. It's a problem that faces like much of the internet faces. And so there's been like a huge amount of money invested in trying to solve this problem in other contexts. I think obviously doing stuff on chain presents like an additional layer of complexity for solving this. But we figured that maybe the best way to attack it was to use kind of what's proven in Web 2 and adapt that to be implemented into Web 3, right, and into crypto. And so I think what we decided to do was just use like CAPTCHA in essence, but create an on-chain permissioning structure to where if you don't pass the CAPTCHA, you actually are prevented from executing the transaction on chain. And so the CAPTCHA mechanism itself is very flexible. Initially, we've had some of the parameters set relatively low, and they're still have been quite effective at preventing botted activity. For example, on the DeFi Tuna launched on our platform a couple of weeks ago, and it did sell out very quickly, still within a couple of minutes. But within those couple of minutes, we blocked almost 25,000 separate like attempted bot interactions, right? And so I think there's a lot of, which was also pretty interesting because Tuna launched like on only the second day of Wavebreak being live. And already there had been multiple bots built specifically for Wavebreak just in that one day, right? And so I think it was pretty interesting to see how fast things adapt. And then also on our side, we have the ability to kind of change the parameters as bots adapt as well. Right now, the CAPTCHA we use is all like passive in the background. So users don't actually have to like click on boxes or maybe what they think of as CAPTCHA, but there's kind of a reading of the user's behavior that the program makes, and then makes an evaluation, assigns a score, and you have to have a score higher than that threshold, right, to be able to execute a transaction, right? So there's flexibility on what that threshold is, but we can also swap out CAPTCHA providers as necessary too. We could, if necessary, like actually add a CAPTCHA pop-up if people really, like if somebody doing a token launch really wanted to like be maximally protective against some of this stuff. We can kind of make things custom by launch as well. So it's difficult for bots to prepare in advance.
So you're saying that if I wanted to launch token on Wavebreak, I could make sure that everyone has to click through all the crosswalks and all the fire hydrants before they actually jump into that?
Yeah. If you wanted to, for if you're doing like a custom launch for the core product that's permissionless and doesn't require any kind of like interaction with the Orca team to launch something, it would be kind of like a baseline set of parameters. But for like a higher profile launch, doing a fundraise, anything like that, we can implement more customized options. We may have more customized options available in a user accessible way in the future as well. But for now, that's reserved for kind of more higher touch stuff that isn't a typical meme launch.
Yeah, because that kind of harkens back to the old NFT days. And we also saw during that time that bot operators would encourage people to, open up the Magic Eden minting page before running their scripts and things like that. So is it just a bit of a cat and mouse game, really? You make this change, then bot runners and scripters make this change to kind of meet that. How do you kind of find parity there?
Sure. Yeah, I think it'll absolutely be a back and forth between like bots and bot detection probably forever, especially as kind of like both sides are now empowered with kind of more machine learning and AI tools to kind of go at each other. I definitely see it as sort of an arms race. And our goal is just to build something flexible enough that you can keep adapting and plugging in the new, like best set of the technologies to prevent these things and try to stay as ahead of the curve as possible. I think there's always going to be some trade-off too of how strictly you want to prevent bots and how you want to do that, because it is a probabilistic determination. And so the more strict you are, the more real humans you also block, right? And so I think this can be a frustrating UX in a sense, but also at the same time, with no bot protection on a competitive launch, you're kind of like all blocked by default by the snipers. And so there is kind of a trade-off there that I think is worth making. And our goal is just to have the product built in such a way that we can adjust very rapidly without changing any smart contract code, right? So it's just plugging in the new CAPTCHA parameters and being able to adapt.
Yeah. Is there an argument that you're kind of shooting yourself in the foot by completely denying bot volume? Because, we talk about market share and we talk about Launchpad volume as one of these key metrics that gauges how healthy it is and how well it's doing. And if you eliminate a large chunk of the people who would be making those trades, does that kind of does that reflect badly on the platform itself if people just want to look at face value metrics?
Yeah, I think it definitely does put us in a more difficult position in terms of these numbers, right? And so I think part of our goal it will be to try and shift the narrative around volume or particularly volume being like the best indicator of token quality or as being the best tool for token discovery. I think what we've seen happen over time as the launchpads have evolved is like when they first started, volume really was a genuine sign of organic interest in the token. And then as people realized that, there became a lot of ways to kind of game those metrics and make volume appear higher than perhaps it actually is in terms of organic interest. But it is a difficult problem, right? Because it is at least an indicator. Like there's not a lot of other high quality indicators people use, right? And so I think there's a bit of a narrative shift that we would have to kind of get people to accept in terms of evaluating token quality or discoverability, you could say, because there is a lot of volume that flows from the programmatic activity, right? Whether it's on the bonding curve stage or later, there's a lot of programmatic trading that's driving numbers on meme coins.
So one of the initiatives that I really love about Wavebreak is this concept of daily rewards. So traders who use the platform a lot, at the same time every day, they're going to get a small airdrop of the best tokens of that day. It's an awesome idea. It's rewarding, it's engaging. But my knee-jerk reaction to this was that it creates a funny kind of market dynamic where at the same time, the daily runners, let's call them, the token of the day, are going to get distributed to a bunch of people. And we work in a market there where the average hold time is, seconds. It's not minutes, it's not hours. So how do you kind of balance this reward mechanism without just discouraging people from buying into the successful tokens? Do you have a different read on this?
Yeah, I think that's a very good point. I think one thing from our observations so far is that the amount of tokens that go into the prize pool when you graduate, it's a little over 1% of the token supply. So it's enough to hopefully kind of be meaningful to people who are claiming rewards, but also isn't a huge amount relative to either the market cap or necessarily the liquidity in the pool either. So it should be hopefully not something that creates like a large, like a material downward price pressure just because of the size. But I do think the similar issue does exist with the creator side of rewards as well, right? Where it can be a similar problem with people earning almost like too many LP fees on their creator position. And I think that's something that we responded to feedback on immediately as well. So even on day one of the launch, we adjusted the parameters down for LP fees pretty aggressively, just based on feedback there, because I think we did see that happen basically, right? Successful tokens were kind of running. The creator had earned so much that they were able to then sell a lot, and that obviously showed up in the chart. Like there were some other ones that took a different approach and decided to just burn all of their creator rewards, and so that was good to see. That's been the most successful token so far, I think. So that's setting a good example of like what kind of leads to more sustainable success. And we're in the process of making some changes to the LP fees as well for creators, so that creators will be able to basically earn everything in SOL, and the like meme coin portion of the fees will actually be burned, right? And so it should be, I think, a better mechanism on that side as well.
Okay, excellent. And so how have you found the reception been so far to Wavebreak? Because like you mentioned, you had feedback about fees being too high, which then led to, poor performance on tokens. How ready are you to adapt to community feedback and implement that right away? And what needs to happen for Wavebreak to really take off and start challenging the likes of Pump and Bonk and all these other launch pads?
Yeah, I think for us, the technology itself on the anti-bot side, the reception has been very positive. It's worked very well. It was good to have that DeFi Tuna launch. We saw a very competitive environment, and the technology work as intended. I think on the other side of it, definitely listening to a lot of feedback from users. We made that adjustment on fees, are working on some other LP fee adjustments, like I mentioned, as well as some additional features for discoverability within the app, and things that make it easier to kind of identify more traits about tokens that might be interesting. I think the biggest challenge still just remains probably distribution, right? So part of the nature of it is that not only does it prevent programmatic activity, but you have to use it through Orca's UI, right? And so this is kind of a different flow than traders are used to. Tons of volume obviously flows through apps like Axiom, while things are on the bonding curve phase. And so working on ways to enable people to have custom integrations that still support the anti-bot mechanism while improving distribution are probably some of like the immediate biggest unlocks, I'd say, in terms of growth. Because I think even with the technology working very well, we need to make sure that these tokens are discoverable for everybody, right? And making sure that they're actually in front of the traders. And so the creators that we're attracting that care about having a more fair launch structure still have the audience they need for their tokens to be successful.
Excellent. And it was kind of, I'm not going to say it was an inevitability, but Orca making a launch pad kind of continues this trend that we're seeing across the ecosystem, in which teams, and especially DEXs, kind of feel like they have to own that entire customer experience, and they have to own that full stack liquidity harbor. This probably affects Orca maybe less, because you have a tremendously capital efficient platform already. You got some of the highest volumes for SOL USD pairs, LSD pairs, project tokens, things like that. Whereas platforms like the PumpSwap AMM, for example, probably aren't getting a whole lot of SOL-based and stablecoin volume. So where I'm going with this is, do you see it becoming an established trend that DEXs need to have this full stack platform, that they need to go from Launchpad to AMM to offering as wide a net as they can? Do you think that, where do we go from here? Does this mean that every DEX is going to have its own kind of Axiom-esque advanced trading platform? What happens next?
Yeah, it's a very, very interesting question. I mean, I think definitely that is the trend we've seen, is that everybody is kind of vertically integrating in some sense. I think it's one really interesting thing from my point of view about this is how basically looking at like from like the meme coin side and kind of like traditional asset side. And I think like the answer to the question may be like a little bit different for those categories. I think in crypto, we're kind of seeing it evolve to look more like traditional Web2 technologies than it looks like traditional finance, especially on the meme coin side, where regulators have kind of signaled more recently that they're probably going to mostly be like kind of hands off and let it go and like people have fun. And so I think on the meme coin side, my guess is that we'll continue to see kind of consolidation like that. People try like kind of building like super apps around memes and the ability to launch them, trade them, provide liquidity for them, all of these things. There probably is kind of like, my guess is that trend continues in that direction. But my guess is that on the other side of things, like kind of like the stuff that you mentioned is more like our traditional like strength. My guess is that you continue to see more kind of separation between different parts of the stack, especially as like RWAs come into the picture, and you see a lot more stuff on that side where you're dealing with highly regulated entities that are used to doing things a certain way. I think there might be some nervousness to kind of put all those different risks into like one entity, and because I think it makes things like like FTX much more easy to happen when that's the case. And so the stakes are just different when it's like equities, for example, versus memes, right? And not that there's anything wrong with that, right? It's just that they're kind of like different types of assets. And my guess is that we might end up with different market structure to some degree for the two things.
And it kind of goes back to what you were saying earlier about how volume is not this be all and end all metric of what is organic activity, you know?
Yeah.
So I'm going to switch gears a wee bit. The Orca DAO recently proposed a new governance measure. You're talking about putting 55,000 SOL and 400k USDC into Orca buybacks and to boost validator on the boost stake on the Orca validator. Are you able to tell me a bit more about the motivation behind this proposal and how important are buybacks in today's market?
Sure. Yeah. So the proposal it was proposed by our governance council, and they raised it to basically allow the council more flexibility into timing of buybacks. And so without this proposal passing, if they wanted to do a buyback, they would have had to like come make a proposal about it, wait for the vote to pass, wait for the veto period to pass, and then do the buyback. And also simultaneously giving them the ability to delegate to our validator and then withdraw to do buybacks if they want to, right? And so it's more about increasing autonomy for the council to move quickly, to be able to respond to the market conditions. So we do have 20% of all revenue goes to programmatic buybacks already. And so this is basically using a different chunk of revenue and giving the council the authority to use that for buybacks in a discretionary manner on top of the automatic buybacks that already exist.
Okay. And we're seeing everyone doing buybacks at the moment. You know, it's really become the meta, it's become the trend. Is that kind of a necessary measure to remain competitive in the market today, do you think?
I think so. I think one thing is that it's a helpful signal, at least to people that you do intend to return value to the token, right? I think this has historically been like a pretty difficult thing to navigate for crypto protocols in terms of regulatory sense. Like tokens are not equity, but people do want to feel like they're part of a protocol success, right? And so I think Orca, for example, like Orca does not have a separate equity entity that accrues any value. Everything flows through the token itself, and so it's the only real instrument or asset that's kind of attached to the protocol, you could say. Users help drive success, and so like Orca implements ours through a liquid staking token, X Orca, that will go live next month. The buybacks have been continuous since that proposal passed in early in the spring. So there's a pretty big chunk of Orca already bought back, ready to be distributed into our liquid staking token, but that should go live next month, I think.
Okay. And so are there any fees on kind of minting and redeeming Orca for X Orca, or is it just a straight?
No, I believe there should be no fees. Yeah, it's should work much like a liquid staking token for SOL, but no fees. And then there will be, of course, then I assume like pools will exist where you can pair Orca with X Orca in a liquidity pool.
Okay, perfect. And Nathan, just to finish up, I would love to hear your take on Solana ETFs. Now, while obviously it's a very, very exciting catalyst, it's very bullish. People love the idea of having Solana ETFs on Wall Street. While that's all great, and while there's a lot of optimism, do you think that trickles down to the on-chain economy?
It's another great question. I think it's hard to say. I think for the regular ETFs, I think that's possible, or at least if they do succeed in kind of making the price of SOL go up, then it does kind of create an on-chain wealth effect as well, even if there's not like a direct flow always between the two. And so I think there's potential on that side. I think also it just helps probably with some of the spreading awareness of the network and kind of improving mind share by getting it in front of kind of like a different audience that may not be used to seeing it. At the same time, like the thing that makes me more cautious with my optimism is just like the proliferation of all of the other kind of crypto vehicles that we've seen over the past 6 months or so. And so it's not obvious, at least, like where the marginal capital will come from eventually as it dumps into all of these different things. I mean, obviously, I think SOL is like a very high quality asset, and so it's differentiated in some sense from some of the other stuff that we've seen go live relative to, at least like in terms of the network that it represents and kind of the opportunity there. And so I think there is some differentiation on that side because of SOL's like strength and kind of the ecosystem that it's proven out in technology over the past 4 or 5 years. But I do think there is probably more competition for dollars that want crypto exposure than there were in the equity markets than there were like a year ago.
Yeah. And so you touched on a lot of those crypto treasury companies. Do you think that they pose a systematic risk at all? to Solana, to crypto in general? Is it kind of a Trojan horse of a disaster waiting to happen?
I think it depends on their structure. I think the ones that raise a lot of money via debt, I think probably have a higher likelihood of creating a lot of concentrated sell pressure at some point in time, you might say. So I think those are the ones that seem like a bit riskier. The others, I'm not sure if others there's an argument they're kind of somewhat benign, I suppose, but the ones that are it's like getting highly levered. I mean, we've all been through a number of crypto cycles. We kind of know how this game often plays out, right? And so I think that'd be my concern there.
Okay, excellent. Nathan, thank you so much for coming on. It's been great chatting about Wavebreak and picking your brain about how Solana's on-chain economy works. Again, all the best. Keep cracking on, and we'll catch you next time.
All right, thank you so much for having me.